Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it should be relied upon as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It's just general in nature only. Happy New Year and welcome to what is going to be a much harder year to work as traders than probably what we've been used to over the last 2 years, because the trends and the movement and momentum that we've been seeing over the previous 2 years is now going to go probably the other way. You're going to have to be nimble and you're going to have to be very, very aware that there is now some big headwinds going on in what has been traditionally a very good trade over the last 2 years, the US dollar. Because for me, the theme of this year isn't that it's going to be the year of the tiger and the Chinese Lunar New Year, it's going to be the year of the hawk. And inflation in the States, as expected, was hit 7% year on year in December. And that was forecasted. In fact, it was basically bang in line with where we were. But that is the fastest rate of inflation since June 1982, so 40 years ago. The difference also from then to now is that we now have a Fed that is chasing the game rather than preempting the game. And that is why we are here at the year of the hawk with regards to how the Fed reacts. The perma-dove that has been Lael Brainard, the one that was basically seen by a lot of people as if Jay Powell didn't get up as chairperson, that she would take over, go back and revert back to her dovish ways. Her testimony last week shows you very clearly that this year is all about that idea that not just that rates are rising, but they are coming at a rate of knots when it happens. The fact that she said they are poised and ready, that as soon as they unwind quantitative easing, which is in March, that they are ready to go, that they are very aware that they do not want to get entrenched high inflation and that it would be a headwind for what they do. That therefore means that we are looking at a minimum of 3 rate rises in 2022 if the dot plots are to be believed. In fact, if you take the average of the dot plots, it's sitting at about 3.25, maybe even as high as 3.5%. If you also look at the current polling, the expected average of movements in March of a rate hike higher from analysts sits at 80%. All of this has changed because of the CPI that's now come out and said that the transitory story from 2020-21 is long dead and buried, and we're now into 2022, which is getting rid of entrenched high inflation. We also see in the States that their unemployment rate is now back at pre-pandemic levels, and the employment market is booming over there despite Omicron and what it's currently doing. That in itself is quite a story to be aware of and to be thinking about in terms of how you look into the future. What this is meant for FX, well, let's have a look at this. This chart here is Dixie, and you can see very clearly a very decent breakdown in Dixie. And it has gone through that very strong range that's been there since December, and we're away. And it's led by this. This is euro dollar, and you can see it's been breaking out quite nicely, almost exactly the same pattern as you'd expect to the upside. It's now heading back towards 114 and could be going even higher. It's the same across anything that's sort of seen as a high-end risk currency pair. Look at CAD, look at Aussie, look at pound. It's doing all the same things. But it means, therefore, we're going to have to work hard, because there is reasons that, again, the US dollar will have some positive movements. There will be reasons why, things individually, Aussie dollar or pound, for instance, will have headwinds. There's geopolitical reasons in 2022 for those two to look at. So just be aware of that. But there is a clear difference between 2020, 2021 and 2022. And the story of 2020 and 2021 is probably now gone for 2022. And it's no longer a big, long call on USD come hell or high water, which is what we've been doing. We now need to be nimble and be aware that the US dollar now has a sell call against it, and people are doing that quite quickly, and to be aware that when it does go off, that's fine, but also when it gets recovered, and it will, that we're nimble on that as well.